Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
You get the idea?
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him 2 lips.
It's like no cheese I've ever tasted.
And tell him that his
Here's the Sandman.
Over Sandman.
You've worked hard the last 20 to 30 years at it. You're now finally making some profits and able to stick some money away, and then you get that call. What am I talking about? Your small business. Is now the time to sell it and cash out? Selling your business could be one of the most important decisions of your life. And if you're thinking of selling your business, then you need an exit strategy so you don't make a huge mistake. Clear your schedule for the next hour as I'm going to walk you through things you need to consider before you put your business up for sale. Good morning. I am David Hollander, your host, and this is Protect Your Assets. For those of you just joining us for the first time, welcome. People around here, you hear the jingle, they call me the Sandman. That's because I help you keep more of what you've worked so hard for. And when you're talking about your business, I know you've put a lot of time and energy into that since you started it. So what are you going to do? Well, that's why we're different. We have a financial firm, legal firm, and a tax practice all in one. All these different professionals working together. Been doing this for the last 30 years plus. So if you own a business and you're thinking about what the next chapter may look like for you, you know, life after owning your business, then you're definitely going to want to listen to today's show, because what we're going to do is we're going to put out there, how do you remove this uncertainty when you get into a transaction? I know what you've been doing the last 10, 20, maybe even 30 years. You're probably driving to work right now. You're getting ready to set up for the week or weekend or whatever you're actually doing, but you never let it go, do you? It's always on your mind. You wake up at night thinking about it. You've taken all that risk. You've probably leveraged your assets, put debt on credit cards just to keep payroll going, keep people employed. And now you're making a profit. Now it's finally working out. And then all of a sudden you get a call from a private equity firm who's interested in your business. And then you're asking yourself, well, how do I prepare for something like that? What steps should I take now before we enter into a letter of intent, which is an agreement to sell? Or if you're in it right now, what do you need to know before you close that deal? We've literally had people who've been in the process, and then as they get the money, then they call us. Don't do that. Let's get ahead of this now. If you're fearful about it, if you're feeling unclear or anxious about what the next steps look like, well, that's because you just don't have a crystal clear path or plan for the next years of your life. And I'm talking about before and after the sale. You have to look at both of those things and understand what you're going to do. And by being uncertain about any of that, well, that's just going to breed fear. And it's going to also create bad decisions. I've seen that so many times. It's been the beauty of what I've done over the last 30 years. I've seen business owners make mistakes, even with the advice, quote, of their trusted advisors. Bad decisions. So I have your antidote today. Well, at least the first dose. And if you want to learn more about it, just stay tuned because we're going to get into it. The exit strategy for business owners. I'm going to go through the book that we just put out there. It's called The Entrepreneur's Exit Strategy. I'll be giving that away. So stay tuned. Now let's get started. You know, it was another pretty good week as summer is just around the corner. The Dow was up 1.2, S&P up 1.5, hitting that 6,000 mark again. The NASDAQ up 2.2, finally positive on the year. And the international index, still the winner overall, up 1% for the week. Year to date, it's up over 16%. 10-year Treasury hovering around 4.5%. And oil creeped up this week pretty nicely, 6.3% to close in at $64.65 a barrel. And so markets liked what they saw as the jobs number came out Friday. This was the May jobs report. This was sort of a big deal because we wanted to see if things were cooling off a little bit in light of all the taco and trade war and all the stuff that's going on right now and the fights with Elon and Trump. It never ends, does it? It's exciting. So the job market's still pretty healthy overall, and that is helping the market. But this is the first time that we're going into the summer season where there could be definitely some more volatility. And why is that? Because you've got the tariffs about to come back into fruition. Remember, there are dates out there that are coming, the July date, and then the expiration of the China deal at this point. So if those things don't go well, I would expect more volatility. So keep your eyes on July 9th as the expiration of that 90-day pause, and August 12th, because that's the end of the 90-day pause for China. The Fed, I don't think the Fed's going to do anything until we get through the season. So I think their first move will probably be towards the end of the third quarter, maybe beginning of fourth quarter. So if you're, a lot of people call me, when can I refinance my mortgage? Well, you want to wait till they lower rates because right now, well, not bad, but I'd wait. I'd wait a little bit longer, maybe even to next year at this rate, just because it's looking like rates won't really be coming down at all until the end of this year, until a lot of this stuff settles out that's just unknown. That's the bottom line. There's just uncertainty still. And when shoes start falling, which this week was, you own Tesla stock, you know what I'm talking about, things happen and things fall apart and then they come back. So that's a little bit of the world that we're in right now. And if you're looking at the bond market, which also shows us the future, what the bond market thinks of the future, this week was no exception as we saw the 2-year yield drop a little bit below 385 and the 10-year, like I said, 450. So rates right now are pointing to the fact that we're basically just hanging on. No recession yet, but that could change, particularly if the volatility picks up and some things change. So again, we just got to hang in there, keep diversified, keep your plan. Don't freak out. Are you considering selling your privately owned business? Well, if so, you need to find out what specific steps you should consider taking now before you enter into any sort of agreement or conversation to sell that business. We're going to go through some of that when we come back. This is the Protect Your Assets Show. I'm David Hollander, and we'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander. People around here call me the Sandman. That's because I protect more of what you've worked so hard for with tax laws changing as we speak. What are you going to do to protect more of what you have, what you've saved? Well, tuning in today is a great idea because if you own a business, maybe you're driving in right now, taking care of business, and you're thinking about what the next chapter looks like for you. Well, I've been doing this for over 30 years. We have lawyers here. We have financial advisors and tax people, and we see these things every week. And so we're going to share with you today some of the things you need to know if you're thinking of selling your business, what's coming your way. If you're looking for the right exit strategy, and of course you want the best price, well, today you're at the right place, because we're going to walk through some ideas you should be thinking about. So write these down, please. First idea is you have to understand, and I mean this, understand what is your company worth? Often, the business is the largest asset in your estate, but you just don't know how to value it. And then when the decision comes up about selling it, this could have some very big financial ramifications when it's all said and done. We've seen people just wake up one day and they get a phone call at a moment's notice and they're going to sell that business and they don't put a lot of thought into it. And that could be a catastrophic mistake. So the second recommendation would be to make a plan, a written plan to sell your business and have it built or constructed with your input, of course, by a business attorney who does this, a tax professional who can run some numbers for you and give you some estimates on what different things would look like, ordinary income versus capital gains, and then a financial planning team that puts this all in writing so you can follow it and you can map it and you can structure it and execute just like you might a pass to the end zone, right? Just map it out. So this is the same way we do it. And it all starts with figuring out what is the business worth. And this is difficult. And so I'm going to give you some outlines here right now. And then when we wrap up this section, I'm going to give you an opportunity to get my book where we talk about this. My chapter 3, starting on page 19, we get into this. How you do it. All right. So here's the general rule. Typically, a lot of service industries sell for typically 2 to 3 times your gross earnings. Other businesses, well, they sell for more. That's just because they maybe have a competitive advantage or they have a unique market or they have a lot of goodwill that's out there. So you could get even higher multiples. I've seen some businesses that typically sell for 2 to 3 times earning go for 17 times earnings. Yeah. That guy's flying a plane around right now. His own plane. He's got a pilot, of course, but, hey, he took the money and ran. So we got to figure out what's the business worth before you start the process to sell it. Once that decision's made to sell your business, then we help you do one thing, which is super important, cleaning up your books. This is sort of a one that you've been going along, you've been paying for your car, your cell phone, right? Dinners, things like that, of course. But you got to clean up your books because the purchaser who's coming in, well, they're not going to take your car or your cell phone, or right, and that's part of the deductions. So one of the things we typically do is we're going to recommend that you separate your owner or family specific stuff from the business stuff. And you drop those off the P&L. Now, if you're going to do it through there, you could do it where it's just owners, and then you can peel that off as a separate line item as opposed to the gross revenue net EBITDA, which I'll get to in a minute. When you remove these costs, the cell phone, the car, what's going to happen is the gross income should increase. And as that income increases, guess what? That means you're going to get a higher price because the buyer is going to get a better picture of the company and the resources and income without you there. That's what they're buying. The other really great advantage of you doing this now is that you're going to get a better idea of what it's going to cost for you to retire or be in retirement. You may not retire. You may stay on as a consultant. You may go do something else. That's fine. But what is it going to cost to maintain your lifestyle? You may not know that. But by pulling these expenses out of your business, which is paying for your lifestyle right now, you will know. Well, it's a great place to start. The next thing we'd recommend is typically we'll get a CPA or a very good bookkeeper in there to, in a way, audit your financials, audit your books, clean them up. Because this outside review by an accounting firm gives the buyer who's going to come in more confidence in the data that you're going to give them because they're going to request this. They're not just going to like you as a nice guy or lady and just say, hey, thanks. No, that'll be the first part of it. But then they're going to get into what does this business really do? What does it make? What's the bottom line? What's the internal rate of return on this? So think about this. The accounting firm that you hire should be able to produce quality reports that any buyer who's going to ask for them can clearly read them and identify all the bells and whistles they want to see. Now, I outline that for you again in the book. It's in there so you can, literally follow check sheet here on what that means and what it should look like. And again, you can interview these firms to ask them what it would be and how much does it cost. Make sure you get that up front because these things can be all over the place. I've seen values of $5,000 charges up to several $100,000 to do this sort of work. So be careful with that one. Don't walk into any negotiation without knowing this in advance. Because I tell you right now, if you're being approached by a private equity or someone who's sophisticated and buys businesses, has been buying a lot of businesses, you're essentially walking into a gunfight with a knife. You're going to lose. You're not going to like what's going to happen. So don't even do it. It's not even worth it. I know it feels good. It sounds great, all that money, but you're not going to like the end result if you're not prepared. Selling a business can take anywhere from 2 months to 5 years. This is the average. I typically see things 3 to 4 months if you're prepared and rolling through it. But again, they can happen quicker. By starting early, by getting in front of this now, you have time to adjust. And this typically leads to a better sales price. Make sure that you have employee confidentiality agreements and vendor contracts organized and available. Preferably electronically, so you can send those as a due diligence package when it's requested. Also, make sure you have the right insurance in place to protect your personal assets if you're a director or an officer, because the firm stepping in is going to want to see that. They're going to want to make sure you're covered, and if you have that covered already, well, great. You just get a tail and you're covered. It's kind of like selling your house. Think about it that way. If you're going to sell your house, what do you typically do to get more money? What do the realtors recommend? Well, you spruce up the kitchen, the bathroom. You neutralize the paint colors. You replace the old flooring, right? Some simple things just to make it look a little better so you get more when you sell it. Then you have to ask yourself, do you have the time to get all this in order? Well, if you're driving to work right now, you're hearing me right now, you're probably saying, I'm too busy. I can't do this. I just don't have the time. Well, here's what I would recommend. You can pick up the phone right now and you can get my book. This is a great way to start an outline to see some things that you're going to need to know. And I'll absolutely give this to you right now if you call this number, 866-PROTECT, 866-776-8328. Get your copy of The Entrepreneur's Exit Strategy. It's got a really cool picture of McLaren on the cover. In this book, we're going to take you through selling your business. What do you need to know up front? What do you need to do during the transaction? What do you do at the close? What do you do for the next adventure of your life? These are all things that are going to face you. And so it's just nice to get a second opinion or a fresh first opinion if you haven't got one at all. Call this number, 866-PROTECT, and get your copy of The Entrepreneur's Exit right now. Coming up next, it is time for our popular They Say segment, where we will share how to price your business. Even if you don't intend on selling the company, you should have an idea of what it could be worth, because if you die, your family will have to pay taxes on that asset, and you better know what it's worth. So much more useful information is coming your way on Protect Your Assets. Stick right here.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to PYAevents.com and signing up for our next free event. That's PYAevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander. People around here call me the Sandman. And that's because I help you protect more of what you work so hard for so you can sleep better at night. If you're working hard over the weekend trying to do something with your business, well, at some point, you're going to have to make a decision about that. Are you going to sell it? Will it be part of your estate? What are you going to do? So today we're talking about how business owners can prepare for retirement before they sell their privately owned business or pass it on to other family members. These are things you need to know. So we're talking about that today. Now it's time for one of our fan favorite parts of the show. This is our They Say segment where we debunk common myths, half-truths, and sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All right, so here's one they say. They say that your business should be priced based on the income it earns. Well, is that all there is to it? I'd say no. You have to realize that people who are trying to purchase your business usually have a reason for that. And the ones who are bigger, who need your market or need something you're doing that's special, well, they're probably going to be willing to pay a lot more than the typical valuations. But one way to figure this out is to compare the valuations of, say, a publicly traded company to one that's similar to you, even though you're private. It's a good way to start getting a valuation. Another way is to look at acquisitions of similar companies with publicly disclosed prices anywhere throughout the U.S. in similar type markets. A third method we use is what's called, this is a little complicated, it's called a discounted cash flow analysis. That sounds sexy, doesn't it? Which this does the following. It forecasts the value of the purchase price based on what the anticipated future cash flow could be once we'll call it the slash and burn occurs, meaning that once you get absorbed, a lot of efficiency. They use that word efficiency. We've already got administrative support. We've already got people answering the phone. We've already got a business manager. We've already got a CFO, all that stuff. So if you slash all those jobs from the existing company and you roll it into the new one, well, that's a net savings, because typically one of your biggest costs, if you run a business, you know this, is overhead. It's your people. The longer you've been in business and the more predictable that cash flow can be estimated, well, that means you just get a better price. You may remember in the last segment we were talking about buyers generally basing what they're willing to pay on some kind of multiple of your earnings. Well, this is that term I use called EBITDA. You're going to hear a lot about this. I know it's a funny term. It means earnings before interest, taxes, depreciation, and amortization. EBITDA. It's an important term when you start selling your business. You're gonna hear it. They're gonna throw it around like it's water. So know what it means. What does that mean? The earnings before interest, taxes, depreciation, amortization. If you have strong numbers in that area, and you have fundamentals, this is where EBITDA is not what it's all about. Like if you have loyal customers who've been around for a long time and they support your business, that means something. That has value. If you've been around for a long time, that has value. If you have a good cash position, that has value and not so much debt. Like these are all things, younger clientele, right? Going to keep paying those fees for a while. I mean, these are all things that will drive higher multiples. The sale of your business could have the following, some very hefty tax implications. This is where you need to get in front of this now. A lot of small business organizations that we come across, for some reason or another, have set up different structures. So the most common one I see is an S corporation. Or in California, what's very popular is the LLC, the limited liability company. Now, if you're the owner of that, you've been passing through those earnings off of that tax return you've been filing to your personal return, and then you pay taxes on that at your individual tax rate. If you're a C corporation, and again, this is where some mistakes have been made. You set up a C corporation for a reason that today doesn't make any sense. You pay taxes at the corporate level, and then you're paying taxes again at the shareholder level, at your level. So it's almost like a double tax. The proceeds from a sale of a pass-through entity like an S Corp or an LLC, that's only taxed once. But if you have the C Corp and you're selling that, well, that could be a problem. So again, these are technical legal things that you want one of our tax attorneys looking at for you before you make a mistake. And you definitely want to do this before you negotiate the structure of the buyout. Because in general, again, this is generalities, you may want to structure your deal so that more of those proceeds that come out are taxed at the long-term capital gain rate, which currently at the federal level is at 20%. But please don't forget this. If you're starting to sell for over $1 million, then you're going to pay more taxes, again, with capital gain, because in California, as you know, last year they passed that new capital gain tax, over 14.5% just on LT capital gains. On top of that, you have the Medicare 3.8%. So you're getting really close to 40% now on capital gains. And right now, they are doing the big, beautiful bill. What is that going to look like? No one really knows right now. The final countdown is coming. What will that be? What is it going to mean to you? How do you structure your deal with these unknowns? Well, that's how you negotiate the contract, because the form of that contract, the payout, very much like an athlete, very much like a CEO, like all these sort of contracts can be negotiated as part of the deal. And your buyer, who really wants you, may make you a better deal. Like what? Well, you could get more cash up front instead of equity. Most of these private equity love to throw you equity in their new deal, their new venture. It's going to be so great. You're going to make so much money. Avoid that. Avoid that temptation. If you take more cash, that could mean you get a lower price, but then you have cash. If you take less cash, well, that's going to put more risk on you, because if they don't deliver or perform, or the economy changes, or something in the government changes and now it's not so viable anymore, well, guess what? You just lost all that equity. You just lost it. It could be gone. I've seen that. It goes from 10 million to nothing. So you don't have to work with the law firm, by the way, that the buyer is pushing you to. It's another one. The buyer may say, oh, work with this firm. We work with them all the time, and they're going to do great for you. Well, no. You have the right to your own lawyer, and you should get your own lawyer to not only represent you, but to review any paperwork or things that you turn over to this purchaser before you get into that. There are attorneys out there that can charge a lot of money to do this. They charge a percentage of the deal. I've seen attorneys' fees up to $30 million, believe it or not. Yeah, they're huge. So you could also hire attorneys by the hour to look over some things and just represent you. Again, just getting some information you could pay by the hour. It's better than, again, these percentage huge fees that end up coming out of your pocket at the end of the day. Now, we have experience in these types of deals. One of the attorneys on our staff, Ethan Pfeffer, you'll see he's the co-author of the book with me. He's been doing this for over 30 years. Ethan's done many, many transactions representing mainly sellers. And he's available to meet with you to help you figure out what are some of the things you want to know now. Now, this book that we wrote together is a great outline to get started. And if you're thinking of retirement, I have a checklist right now that you can call and get, and it will help you set up this exit. But you got to call me. 866-PROTECT, 866-776-8328 to start getting some clarity around what you're doing. Now, if you're already into something like this, you can still get a second opinion. It's not too late. Call 866-PROTECT. Right now, we're here live, and we'd love to help you. 866-PROTECT. Moving on will be a lot easier if you know how you'll spend your time after you sell your baby. The answer's coming up next. We'll be right back.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I'm David Hollander, also known as the Sandman, and you have been listening to Protect Your Assets this morning. And if you missed any of the show, because today we've been covering selling your business, what are some things you need to know if you're going to transition out of it, pass it on to your family, or just walk away. If you missed any of the show today, you can go and get our podcast. How do you find that? Wherever you get a podcast, just type in Protect Your Assets, selling your business, and the show will pop up, and then you can listen to what you missed. If you like it, please share it with a friend. It really means a lot. If you're just joining us and you own your own business, well, selling it could be one of the biggest decisions of your life. So today we've been discussing how business owners can prepare for retirement before they sell their privately owned business. And that reminds me, if you have not got a copy of our new book, The Entrepreneur's Exit Strategy, that one of my partners here, legal partners, and myself wrote, you can get a copy now by calling 866-PROTECT, 866-PROTECT, and we'll be happy to send you one over. So getting a big chunk of money can change your life in so many ways. Most people think it makes your life so much easier. But like a great quarterback signing a $50 million deal, it's not so great and doesn't always work out that way. And I've seen this happen so many times where it's just not what you thought it was going to be. Many of our clients come from very humble beginnings that didn't include fame or fortune. And selling a business can be like a grieving process. Most of my clients have built their business up with literally blood, sweat, tears, debt, divorce, kids ruining their reputation, all this stuff, right? It's not easy. And it's certainly not easy to let it go. But moving on may be a lot easier if you know how you'll fill your time and spend those hard-earned dollars on what you're going to be doing. So some of my clients wait a few years before they start another business or do something else, but some continue to work for the company as an employee or as an independent consultant for a period of time. Again, you can negotiate benefits there after the sale is final. If that's your plan, then I recommend you work those details out in writing in the contract. I've seen that a lot too, where you think you're going to be doing certain things, you think you're going to have certain power, and you don't. You lose all that. So make sure you negotiate all that and put that in that contract as you're writing it up. And again, that's why you want your own attorney representing you. So you have these conversations and you get that in writing and you read it and make sure it's what you think it says, what it means, and how it works. But keep in mind, it may be hard to watch someone else make decisions for the company that you built, particularly when it comes to some of your most valuable employees. So as you're negotiating that deal, maybe you're thinking about them too. And there should be some key provisions in there that keep them happy. Let them help contribute as well to that agreement as you're constructing it. And write it down. Write down these things that are important to you before you get into this transaction. Owning and running your business identifies you. And this could help you help others, which doesn't necessarily have to mean you're compensated financially for it. Sometimes doing things pro bono gives you a different kind of satisfaction. So I highly recommend you map out your strategy. not only to maximize the amount you could get if you sell your business, but also what are you going to be doing? Take that amount, figure out what the taxes are going to be. What will your lifestyle look like? Where will you live? Why? Where will the income come from each and every month? You just think there's all this money, it's going to be plenty. Well, guess what? That price of that stock drops. The investment you got into isn't what you thought. I've seen many plans constructed with all sorts of things. In fact, I had a client the other day just throw something into ChatGPT and it came back with throw it all into private equity. I mean, I'm like, are you kidding me? Is it sustainable? Is it reliable? Is it going to carry you through? If you're nearing retirement, if you're thinking about this decision, it's important. And changing from earning it to living off of it is an entirely different thing. I heard it put very well by a client the other day. My guy who's made all my money for me as I've been working, he's done a great job. He's a fantastic gardener. But now I'm going to retire. Should that guy who's your gardener be helping you with retirement, which is an entirely different deal? No, you need a new architect. You need a plumber. You need an electrician who specializes in these things. It's the same. Here's what I'd like you to do now. Inhale through your nose. Exhale through your mouth. That's it. Picture a day when you've walked away from the business. And now you're doing all those things that you've wanted to do, but you just never had the time. Picture a day when you can relax, travel, and do all those things that you've always wanted to do. You can do it. Pick up the phone right now and get a 15-minute checkup with us by calling this number, 866-PROTECT. We're here. We're live right now. We have attorneys. We have CPAs. We have financial advisors. That's why we're different. 866-PROTECT. Call us now, 866-PROTECT. I'd like to give a big thanks to the Protect Your Assets team today for putting together a fantastic show. My executive producer, network manager, Kevin Renfer, and of course, my fabulous producers back there, Lee, Dylan, Lucas, Phil, Raph. Thanks, guys. Because without my team, I'm just another pretty voice on the radio. You have been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.